Right, hey guys, making this video for a buddy of mine on how to make entries and exits using Renko charts for scalping crude oil. It also works just for making entries in general. If you're a swing trader and you have your own ideas, you want to take an entry, this is a great rules-based way to do it. Now I use supply-demand zones. Everything I do is based around supply-demand zones, including Elliott wave theory, because I defer to supply-demand zones over everything. That's my prime, absolutely bedrock, foundational force of my trading is supply-demand zones. Everything else goes on top of that. So in this example, now look, all I'm doing is showing you how to make entries. I have to say this, let me back up a step. Renko, very unusual, wonderful methodology. The Renko, these are not candles, okay? They're bricks. And the way they're created is not a function of time the way candles are. This is a very important feature of Renko. These bricks are not created as a function of time passing. They are a function of, to keep it simple, just call it average true range, ATR. So they're created based on price action. So keep that in mind. Another thing is, because of that, if you tinker with your chart and change it, the bricks have the potential to change. Just take my word for it, and also go look at YouTube and study Renko and how they're formed and how they're created and how the ATR handles the creation of these bricks. Now, I don't fully know everything about Renko and the bricks. I just know once I have a chart up in Renko, I don't change the symbol to go look at something else, because when you come back, your bricks might be different. The structure might present in a different way. So leave it alone. That's what I do. Anyway, you can learn a lot more about it than I know. I know just enough how to trade profitably using it. So here's the rules part of it that I like. So in this example, price came up. It got above what I consider to be support, an important level. So I consider this to be a back test. So just in this example, let's say I wanted to get long. As it's coming back for a back test, I want to get long, I want to get long. Boom, here's an area that's interesting. So in Renko, what we want to do is look for a brick to reverse. One brick is not enough for me. I'm going to go with the third brick. You know, this first brick, you don't know, that's not a reversal brick. This is still going down. So we'll call this brick number 1, and this is brick number 2. So the rules are for me to go long or short, whatever direction, doesn't matter. I need to see the third brick get created. And that, as soon as that third brick gets created, boom, I'm going long. What coincides with that third brick getting created is the PSAR dot. Now this is a Renko rules-based thing in conjunction with PSAR. I'm talking about parabolic stop and reverse. PSAR. So in mine is, what is mine set to? 50. My PSAR settings are 50. Okay, point 0.50. So I want to see the third brick and a PSAR dot. Now I ignore the first dot because I don't want to get in too early and have experienced some of the chop. So in this case, it's the second dot. So what is the rule is third brick, dot, go long, right? Boom. So I'm long 80-40. Here's what I love about PSAR. Your stop is going to go at the very first PSAR dot that got created. So in this example, I've got a 10 cent stop loss. And now I'm sitting back and watching the bricks get created. And here's what's so cool about Renko. During whatever this is, now I happen to know what this is because I also have an 8-minute chart of candles open. And that is this area right here. So when scalping with no Renko, you start seeing these red candles, these wicks, and then you might be thinking, well, since that wicked up there, it opened, it kept going higher, but then it reversed. And man, not only did it reverse, it broke the low of the preceding candle. So the temptation would be to stop out right there. which would be fine because, if your entry, whatever your entry was, you're profitable stopping out up there. But the point is, if you're using Renko, you're not stopping out. You're just staying in the trade. And I recommend not looking at all of this other price action on the regular candles if you're trading a Renko chart, because that's the whole point of Renko, is to get you away from those wicks and all the whipsaw. You're just waiting for a dot. Now, the exit is a little different than the entry. The exit is first dot, I'm out. So this first dot got created similar to how it did down here. Is the first brick of a reversal got you the dot. So I am looking to get out of the long trade right down here. And let's say you even missed the beginning of that brick, or you didn't pay attention, you didn't see the dot. Boink. You want the the first dot, which is going to, in this example, it's going to happen to coincide with the first brick of the reversal. So this is where you're going to get out. And even if you're late, maybe you didn't see it or whatever, so you didn't get out for a few more ticks down, you're still grabbing, what is that, 81.02. So you got in at, that's a 61, 62 point scalp. And you probably wouldn't have stayed in if you were using just shorter time frame candles, because you would have seen all those wicks. So Renko can keep you in there. So those are your rules. Wait for the second reversal brick to get created, which, by the way, it's absolutely going to have a dot, because if it didn't create a dot on this brick, by definition, the PSAR, it is going to create a second dot on this second brick. Facts. So rules for the entry is second reversal brick, use the dot, the first dot, as your stop level. And the beauty of this, I'm going to show you one other cool thing about Renko. Let's say you just decided, and I suggest you backtest this idea so you can see for yourself, but here's just a random example. Let's say you've decided I'm going to take every dot reversal that there is. If it reverses, I'm going short. If it reverses again, I'm going long. If it reverses again, I'm going short. And I'm not getting out of the trade until I see a reversal dot. Okay, so remember, my rule is I need the second reversal candle, which is this one. Okay, so let's say I just went short. I got out of the long up here, but I'm not going to go short right there because I need the it's the second reversal brick. Okay, so let's say I waited, boom. Now I'm going to go short and my stop is up here. So it immediately goes in my favor, but not 20. So I haven't taken off anything yet, because I don't take it off until it hits 20, my personal rule. So it goes against me now. And there's still no bottom dot. But guess what? To get out of the trade, it's the first dot creation. So I'm basically getting out very near break even. So I'm not going to let it go again. Look, it created a dot, a reversal dot. So even though this created a reversal candle, where like if my rule is to go long right here, let's say I was going to take every trade. So let's say I went short and then immediately got stopped at break even, but it's telling me to go long. So maybe I just hit the reverse button right there. Let's say I did that. Let's say I did hit the reverse button, and then it immediately goes against me, right? So now I'm long, and then bam, because this is the first reversal dot, I'm going to hit the reverse button again. I'm just using this as an example to illustrate how cool Renko is. So down here, I immediately hit the reversal button, which is a few ticks above where my stop was, by the way. So now I'm short. I just hit the reverse button there, got basically, you get stopped out by hitting the other reverse button. So you went short here. You immediately got stopped, but it went long there. Then you immediately got stopped again on the long. So you got stopped out 2 times consecutively within 30 minutes. Well, it depends how much time these bricks take to form, because these bricks, even though it's an 8-minute chart, these bricks do not get formed based on time. They get formed based on average true range and price action. Important distinction. So you just got stopped twice in a row. Now you're short again because of the rules. Now the dot didn't get formed until the fourth brick because it was chopping up here. And I didn't have a bias. If anything, my bias was still to the long side. But, what can I say? If you just want to take the trade based on rules and these PSAR dots, you're short now from this level right here because you have a dot. Remember, you don't take the trade unless you have a dot and at least the third brick. So in this case, you didn't get the dot until the fourth brick. So you stopped out of your long trade minus, let's see how much that stop was. As a 10-cent stop out. 10, so maybe you stopped out 3 cents on that first stop out. Then this stop out is 10 cents. So you're down 13 cents. But keep in mind, you just made whatever you made over here. So now you're short. And now you're killing it. And you're just riding along. And again, these wicks, you're not looking at the 8-minute chart of candles because you don't want to see all this crazy whipsaw. You're just trading the dots, trading the dots. Boom. You get all the way down here. Right? So your entry was 80.90. And you're finally going to stop out on this brick because remember, for entry, we need the third brick with a dot. But for taking gains, it's as soon as you see the dot, you're getting out. Or a stop. As soon as you see a stop that reverses against you, even if your stop didn't get hit, you get out of the trade on a reversal dot. Boom. So you're out of the trade at 80.20. So you just captured 70 points using this tactic, even though you got stopped out twice in a row for maybe 3 or 4 pips the first time and definitely 10 pips the second time. So you lost, just call it 15. So you got chopped for 15 pips and then you immediately made 70. And then let's just go with the same thing. Well, you can see it for yourself now. If you're just taking the reversals, again, I'm not taking the first brick. I'm taking the second brick and the dot. So let's say I went long on this second brick with the dot and my stop is down here, 1 tick below the first dot. So now I'm long 80.25 and I'm going to go up here and I'm going to take gains at the very first dot, which happened on this brick. So that came in at 52. So guess what? You just made another 27 pips. And even though you run the risk of getting chopped a lot, what if you immediately hit the reverse button, took your gains and immediately went short because of that dot creation? Stop goes up here. You're cruising down. Boom. Here's your first dot is right here at that brick. So you went short 52. You took it off at 35. So you just made another 15. And if you hit the reverse button, again, now you're long. Now, of course, you're not doing this because you're not trading around the clock. But for the sake of example, this is why I'm showing you. If you were to take every single reversal dot, so here you're getting out of your longs because there's a dot, but you're not going to go short because you're waiting for the second reversal brick. So you're going to go short here, put your stop up here at the dot, and you're going to get out of that short trade on this dot creation right here. Boom. So on that one, again, that's 20 pips. Now, I always take gains at 20 no matter what and then leave a runner on to capture the rest. If you simply follow these rules, you're going to trade profitably. There you go. That's the deal. So remember, the rules for getting long is the second reversal brick. Use the dot as your stop. To take gains, it's the first reversal dot. Get out as the moment you see a reversal dot, take your gains. And if you wanted to, you could just hit the reverse button. But, that's not realistic because the amount of time that some of these bricks take is way more than 8 minutes. Way more. So you can't think of it that way, but you get the idea. Go ahead and back test it for yourself. Play with it. You'll see what I'm getting at here. But those are the rules. Real simple. There's more to it, but you'll figure that out over time. Okay, thanks for watching. See ya.